So Brad, you're talking about the dividend maybe being cut. So I've got a couple questions because, on Wide Moat, people have heard us on this YouTube channel for months and months and months say, hey, if a company cuts a dividend, it's probably a stock to avoid because generally speaking, when dividends go lower, share prices follow. Looking at Alexandria's long-term chart, I have the fast graphs here pulled up on my computer. I see, yes, they cut it post Great Recession, like you said, but then over the next decade, the stock took off and the dividend followed. So is two questions, I guess. One is, do you think this is a unique kind of example of, every rule is meant to be broken? And even if Alexandria cuts the dividend here, if they're setting themselves up for growth in the future, it's something maybe you should consider buying. The yield's at 9% now. So if they cut the dividend, it's still going to be a pretty good yield. I mean, I know that's kind of the yield trap mindset that we tell people not to fall into, but fundamental growth will drive the dividend long term. And it sounds like you believe this company can get back to growth kind of once the supply thing figures itself out. But I guess to that point, second question, I know the management's talking about these zombie companies, kind of these other companies encroaching upon their market share in these cluster markets, which they've dominated for decades. Is this the pot calling the kettle black type thing going on here? I mean, like, they probably overbuilt too, right? I mean, I know Alexandria's, their year-over-year rent growth just a few years ago was very strong double digits. We're talking 20, 30%, some of the best that I've ever seen. So I wonder, like, did they get greedy too? I mean, you see rent growth like that happening. I'm sure you want to build out as fast as you can. I wonder, like you said, they got above their skis, but it almost seems like it's unfair to blame the competitors when they're doing the same thing. So those are my two questions. One, do you think the company is headed for growth, or is this an excuse kind of blaming the competition in these niche markets? And then two, even if, say the dividend cut does happen, what does that mean for ARE stock moving forward?
Yeah.